Good morning to First Ontario's Dave Skirvin. Today on Finance Friday, he's answering two more great questions from viewers. These are on RRSPs and TFSAs. Good morning.
Good morning, Annette.
Great to see you. We're going to get right to our questions because Irene from Stony Creek asks, hi, Dave. I'm 61, recently retired and using my company pension, RRSP and TFSA, so I could hold off CPP for now. She says, we just did our income tax and I'm getting a refund, so I'm wondering if I should put the refund into my TFSA or at 61, should we be contributing to an RRSP? And she adds that I find Finance Fridays very helpful. Thank you very much.
Well, thank you very much, Irene, for watching Morning Live and Finance Friday. So first off, good job, Irene, on not taking Canada Pension early, even though she retired before 65, because she or anyone else would lose 7.2% for every year you take CPP early. So that's almost 30% less Irene would get by if she took it early. Anyway, for your tax refund, Irene, yes, a tax-free savings account deposit would be a great idea because that wouldn't be treated as earned income then going forward, any income in there. So that's good. But in terms of your question on should you have an RRSP at 61, particularly when you're retired, my answer to that would be yes. It's an even better idea if you do have the contribution room or if you have earned income, because of the fact you get that tax credit or tax refund on the RRSP deposit. So you could do that and take that refund and put it into a tax-free savings account. Now, it's a good idea to build up as much as you can in RRSPs and tax-free savings accounts, because if Irene can use the Canada Pension and funds from those registered products to hold off Canada Pension even longer than 65, she'll get 8.4% for every year she holds off Canada Pension. So good idea to get as much as we can in those registered products.
Okay, we've got another great question for Ron, who's also in Stony Creek. He wants to know, if I invested $100,000 in stocks and the investment grows to $120,000, could I move that $20,000 in profit to a TFSA, assuming he still has a contribution room, to avoid capital gains tax on the $20,000?
Well, great question, Ron. And the quick answer to that is no. Unfortunately, you can't save tax on a capital gain. You've got to pay tax on any profit or earned income that you make. Moving into a tax-free savings account is not going to help that. But these are really two separate transactions, and let me explain quickly. So any profit you make from a capital gain, such as selling a stock or another capital asset, it's treated better than earned income. So you only have to pay tax on half of that capital gain. So on the $20,000 Ron makes on the stock, you only have to pay tax on $10,000 for the capital gain. So let's say Ron's in a 40% combined federal provincial tax bracket. That's $4,000 tax you'd have to pay on that $20,000. You could then take that $16,000, put it into a tax-free savings account. It would grow tax-free, but you're not going to get any tax credit. Now, a better idea is, if you have the contribution room, take that $16,000, put it into an RRSP. Again, you will get a tax credit on that, at the same 40% tax bracket. You'll save $6,400 in tax. So you could take that, put it into a tax-free savings account, much like I mentioned to Irene. Now you'll have $16,000 in the RRSP, $6,400 in the tax-free savings account, for a total of $22,400 on the $20,000 stock profit. Plus, you've paid $4,000 in tax. You can't get any better than that, Ron.
No, I love these questions, and I love everything that I learned as well from these. Just a reminder, Dave, as well, that RRSP, the deadline season is coming up soon.
Yeah, next Monday, March 1st. So you've got another 10 days or so to get that RRSP contribution in to use on your 2020 income taxes. So you don't have much time left to get those RRSP contributions in.
Okay, thanks so much, Dave. Have a great weekend. And thanks to Irene and Ron as well for your questions. And if you have a financial question or topic that you want covered by Dave, just email your question to financefriday@firstontario.com or get in touch with Dave through Twitter @finance_Friday. And if your question or topic is covered, like Ron and Irene's were, you will win a gift card from a local business in your community.